Stock buybacks are in the news today thanks to last night's State of the Union address, with President Biden calling for quadrupling the tax on corporate stock buybacks. Now, if you're not in the market, you may think this doesn't affect you. But if you have a 401k or workplace retirement account that has mutual funds, this does affect you, as mutual funds hold baskets of stocks. So, what exactly is a stock buyback and how does it benefit the average person holding these stocks? Well, that's what we're getting into today. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're taking a deep dive into stock buybacks, also known as share repurchases, and how this proposed tax increase doesn't just impact the super wealthy. It impacts those of us who are in the market, who have 401ks, and who are saving for retirement. So, Brian, let's get to it. Let's start by defining what is a stock buyback. Make sure we're all on the same page here.
Yeah, Michelle, thanks for this. Stock buybacks, like you said, are also known as share repurchases. And they basically refers to a company buying back its own stock from the marketplace. And what that does is reduce the number of outstanding shares out there.
Okay.
This can increase the value of the remaining shares and can signal confidence in the company's financial health and future prospects. Buybacks can be used to as a way to return capital to shareholders, boost earnings per share, and also increase the stock price.
What are the benefits to anyone who owns stock today when a stock gets repurchased? Like, what's the impact to the average person and to those saving for retirement in their 401k?
Yeah, great question. A company may choose to buy back its own shares for a multitude of reasons. Okay, the first one being it increases earnings per share, or EPS. And think about this. By reducing the number of outstanding shares, a buyback can increase the earnings per share, which could lead to a higher stock price in the future.
All right, makes sense. But can you give us an example of how a stock buyback increases that earnings per share?
Okay, let's say a company's got a million outstanding shares and earns $10 million in net income for the year. Okay. The earnings per share would be $10 million divided by 1 million shares equals $10 a share. That's the earnings per share, right? Now, suppose the company buys back 200,000 of its own shares through a stock buyback program. The number of outstanding shares is now 800,000. If net income stays the same, the new earnings per share would be $10 million divided by 800,000 shares, or $12.50 per share.
Got it.
By reducing the number of outstanding shares, the buyback has increased the earnings per share, making each remaining share more valuable. This could lead to a higher stock price, which could benefit the company's shareholders or people that own the stock.
Okay, so what other reason would a company choose to buy back its own shares? And then also in this answer, how does it impact the average person?
Okay. Well, if you bought stock out there, Michelle, wouldn't you eventually like to see a return of your capital come back to you?
Yes, that's the point.
That's the point, right? So when a company buys back its own shares, it's effectively taking capital that would otherwise be invested inside the company and return it back to you, the shareholder.
Okay.
For example, suppose a shareholder owns 1,000 shares of XYZ company and is trading at $100 a share. If the company buys back 100 shares, the shareholders' holdings would decrease to 900 shares. However, the value of each remaining share would increase, as the earnings of the company could be spread over a smaller amount of shares. As a result, the shareholders' overall investment would be worth more, even though they own fewer shares. But remember this, the shareholders don't have to always sell back their shares.
Got it. Okay. All right. So I'm assuming another reason then, we've mentioned it a few times, is it boosts the stock price, which is another reason a buyback can happen.
Yeah, buyback can increase demand for a company's stock and lead to a higher stock price. Multiple times we talked about this. Here's an example of how stock buybacks can increase share price. Okay. Let's say the same company has 1 million outstanding shares trading $100 a share. The market cap of the company is $100 million. 1 million shares times $100 per share.
Okay.
Now, suppose the company buys back 200,000 of its own shares through the stock buyback program. The number of outstanding shares drops to 800,000. This reduction in the number of shares outstanding can increase the demand for the remaining shares, as there are fewer shares available in the marketplace. As a result, the stock price may increase.
Goes up. Yeah.
Yeah. So, for example, if the stock price rises to 120 a share, the market cap of the company would now be 96,800,000 shares times $120 a share. The increase in the stock price would benefit the company shareholders as the value of their investment would
It
have
goes up.
increased,
Right.
even though they own fewer shares.
Sure.
That's the beauty of it. So,
all right. What's another reason?
one of the other reasons, Michelle, is to utilize surplus cash. Remember, you keep hearing on the news, oh, this company on the earnings report had 80 billion or 100 billion dollars in surplus cash in their reserves, right? Well, if a company has all that surplus cash that it does not need for immediate operations for the business or for growth opportunities, a buyback can be a way to put that money to work.
Right.
This really worked out when interest rates were super low and they couldn't earn anything on their money. It was easier to buy back stock. So here's an example of how a company can utilize surplus cash for stock buybacks. Let's say this XYZ company has a large cash balance of $100 million and no immediate needs for the funds for operations day to day or for growth opportunities, right? And the company's management team may decide to use some of the surplus cash to buy back shares of its own stock. For example, the company could choose to buy back 10% of its outstanding shares or 1 million shares, right? If the current stock price is $100 per share, the company would spend $100 million, 1 million shares times $100 per share on the buyback. After the buyback, the number of outstanding shares would decrease and the earnings per share would increase. Yeah. So here's the big kicker here. Here's what you want to watch for. When you see companies buying their stock back, this is a big signal confidence in the company's financial health and future prospects and can attract more investors to the stock, leading to a higher stock price.
Sure. So, I mean, it's confidence, right? Market is all about confidence.
It is. Yeah. And by using its surplus cash for a buyback, Michelle, the company has effectively put its unused funds to work and return value back to the shareholders. It's a win-win situation for the company and the shareholders, and the company has utilized its surplus cash, and the shareholders have seen an increase in the value of their investment. That's what we want to see, right?
Absolutely. Well, really, there's a lot of things you covered in here, but enhancing the shareholder value is a key benefit to just the average investor or shareholder, right? Because by reducing the number of outstanding shares and increasing the earnings per share or the EPS, the buyback actually increases shareholder value.
Yeah, it does. All the examples we just shown, Michelle, show how powerful a stock buyback program can be.
So. Okay, so I know you can't see the future, which is a real shame, not just for myself, but for the channel. So we last night, State of the Union, there's this urging to pass a bill that we would quadruple the taxes on corporate stock buybacks. So how will this work? I mean, they get taxed on it, but then do the shareholders then get taxed as well?
No. So basically how it works. And first of all, he's talking about quadrupling the tax. Well, what he means is the first 1% tax actually went into effect January 1 of this year, thanks to the Inflation Reduction Act. It was inside there. Well, that did not slow down, Michelle, the corporate buyback announcements that came during this year's earnings season so far in the month of January. And we're seeing an increase of stock buybacks right now. And it's a good thing because of the stock prices are lower right now because of the downturn we had, during the pandemic. But if they do 4 times the amount, what's happened is, Michelle, the corporations pay that tax when they pay their taxes, not us as the shareholders. So it's
okay. And so will this then deter more companies from doing more buybacks? I mean,
well, it hasn't yet. The 1% that went into effect January 1 has not.
But 4xing something is a lot.
Yeah, but remember, this is the State of the Union, and what you're looking at the State of the Union is proposals for the next 2 years or for the next year. And now with a divided Congress, it's very doubtful, even after listening to the media yesterday before the announcement, and then today after the announcement, it's like, nah, we don't think it's going to go through because it will never get through Congress. So it's a nice talking point, though. So
All right. Well, this has been very informative. Appreciate it. Here's the thing. If you like the content of this video, if you've made it this far, hit that like button. Help us grow this channel. Let us know you like the content we're producing. If you've got questions, drop them in the link below. And don't forget to subscribe. Brian and I put out videos almost every day on helping you plan better plan for retirement, Social Security, for how to manage your 401k, how to optimize it, and just really stop being a transaction.
Right.
Yeah. All right, Brian, anything else you want to add?
Yeah, real quick. Make sure you stay tuned and hit that subscribe for one big reason. If you like the stock buyback, stay tuned, because there's a lot of people that don't like stock buybacks and would rather see corporations pay out dividends. We will soon be doing a stock buyback versus dividends. Which one benefits you, the consumer, the best?
All right, there you have it. Thanks so much, Brian, and thanks to everyone who watched. Have a good one.
Have a great day, everyone.